Good afternoon. Welcome to the Business Boardcast. I'm Nikki Larkin, and I'm really delighted that I have Rachel Barker joining me for the first time. Hi, Rachel.
Hi, Nikki.
So the reason why I've asked Rachel here today is she is a qualified accountant. She has been specialising in management accounts for, we're going to be super polite, we're not going to tell you the amount of years because she's but she's extremely experienced and been doing this for quite a while, and she's really, really good. She's she's excellent at producing new sets of management accounts, and she's really good with the clients. So we thought it's perfect for those of you either that have never even thought about having management accounts, or are just thinking, oh, my management accounts pack's getting a bit old and tired, I want to refresh. So today we're going to be starting from the basics and going through about the benefits of regular management accounts. So just one thing on the housekeeping before we launch in. If you're first time watching this and you're watching live, do feel free to put questions into the comments. Or even just say hi, because it's nice to know that it's working as well, as we like to see that the technology has worked today. So do say hi, do put whatever questions, and as we always say, there's no such thing as a silly question. We're happy to answer anything. That's why we put these things on. So enough of my waffle. You're here to listen to Rachel, not me. So Rachel, so let's get back to basics. What are management accounts? What do we mean when we say that?
So management accounts are, so they can be monthly or quarterly or whatever period a company decides is best for them, but they would include your profit and loss, so your income and your expenditure, and then you'd include some margins in there, like your gross margin and your operating profit margin, and you'd have a balance sheet, so you could check up on that, some cash flow forecasting, and then also forecasts and budgets for the year, so you can have some variance analysis and check how you're doing with your expenses. And then you could also include some more detailed expense analysis if you want, or, breakdown of what's in the balance sheet accounts. It's really up to the client. But then also you'd have some KPIs that are relevant to the company.
Yeah, so it's key performance indicators.
Yeah.
So, yeah, I mean, that's what is really nice about management accounts. They can be as small or as detailed as you want, aren't they? They are a real bespoke thing that the client can really have a big input on, which is really good. So we've explained what they are. It's a whole bunch of management information presented for the management team. What are the benefits of regular management accounts?
So the benefits of management accounts are you've got your information there, it's more up to date. So some clients say you want the accounts, say 2 working days after the month end, so that the information they've been presented with is up to date, and if there's anything in there, they can act on it straight away. And then another benefit is
well, you just go, so that's what I don't like about statutory accounts. It's too late. It's once a year. Some of them don't get round to doing them for 6 months. So then you're really talking about potentially up to 80 information. It could be up to 18 months old. So really, that's what's so good about management accounts. And management accounts could be weekly. We talk about monthly because that's the most common. But management accounts could be weekly. They could be quarterly. But that's having that information really quickly, and then then you're able to make changes and see the changes very quickly, isn't it?
Yeah, and investigate, say if there's a high expense. So if you've got from your variance analysis, a lot more was spent than you thought, that can be acted on, and the answers can be found. So rather than looking back, you can see, oh, well, this is out of the ordinary, and especially when you've got month-on-month comparison.
Yeah, then it's really easy to spot the trends, isn't it?
Yeah.
clients like that. And it's also not, you know, some clients, they might not want to just see numbers. You know, some prefer to see things in graph format, for example.
Yeah.
So, you know, you can make it user friendly.
Yeah.
Absolutely. So
Yeah, a lot more user friendly.
What other sort of benefits have you seen for a company starting to have management accounts?
So one benefit as well is you can check up on your aged debtors or creditors, and you'd say, for example, an aged debtor, you thought they'd paid, but actually when you come to do the management accounts, they've not been paid. So you can follow up on that. And again, you can check that all the aged creditors are as you thought they would be and up to date. And then also you can keep an eye on, you can, because you're checking up on or reviewing the information on month-to-month basis, you can keep an eye on your profitability.
So it's another of the accountants trying to get hold of you. They've got
Yeah.
to wait.
They're not watching.
Have to wait. Yeah, why aren't they watching?
Yeah.
Sorry. You were saying, Rachel, that it was checking. What was it checking?
So if you've got monthly management accounts, you can keep an eye on your gross margin. So you can act on. So if say if 1 month your gross margin's gone a bit low, you can make changes in a timely manner to bring that back in line and to make a better profit.
And that we were talking about one of your clients that did just that, didn't they, over the last few years? And tell me, let everybody else know about, you know, because you guys were really focusing upon how things were impacting the gross margin. Then what was the result?
So they ended up increasing their gross profit margin. So they increased their revenue and their overall profit margin. So it could increase quite substantially because they were reviewing the information and just making changes based on that information.
Yeah, they really maximised their gross profit margin, and that of course went down. So their actual net profit, you know, what you actually end up with at the end of the day, that had actually doubled on a yearly basis, hadn't it? Which is really impressive. So
yeah.
They're now swimming in cash. Several years ago, it was a bit more of a feast and famine time, but now they're, you know, because they've got control of their metrics from the packs that you put together, they're really, really understanding where everything, all the drivers. And what was good, they doubled that profit, but without changing their revenue. The revenue stayed the same. It was all about improving the profitability, wasn't it?
Yeah.
Okay, so there was another one that we were talking about, another practical application, because we have a lot of fast growth businesses as well. So ones that have to go through different funding rounds. So do you want to tell me about which parts of the management accounts really helped your client that was having to then end up going for another funding round?
So as part of the management accounts pack, I'd do a cash flow forecast. So you could forecast all the expenses. And again, doing the accounts regularly, you know what the expenses are and you can see them. So we did a cash flow forecast and we could plot when the next round of investment was going to be needed by.
Yeah, absolutely. And that's the key thing, because sometimes founders can be so busy on, you know, building their app or recruiting staff or, you know, getting more clients, by having that, understanding what their runway was and everything, and understanding their future forecasting for their cash flow, it gave them enough time to make sure that they were able to do their funding round, which is really key. So with the benefit of management accounts, now this, you don't just send them to them and put that your clients put them in the drawer. You actually talk them through. So sort of talk me through what is a sort of a typical meeting that happens. What are the sorts of things that you chat about with your clients?
So yeah, I'll try and have a meeting every month to go through the information that I've sent through, and then so we'll go through the KPI information and compare that to last year, or whatever their KPIs are. Then we'll go through all the revenue, and we might dig a bit more into why the revenue's high or low, and then we'll go through the expenses, and again just check that's what was what we thought it would be, or and if this one's high or one's low, then we'd go through that, and then we'd check on the balance sheet, go through all that account detail, and then we might have some age debtor information or age creditor information, might have some employee or salary payroll information. So we'd go through.
The thing is, you've got all that information to your fingertip. So anything that looks out of the ordinary and they ask a question, you're always able to dig down and say, oh, it's because, we got this new client here, or this is the launch of a new product line, or staff costs gone up. Yeah, because don't you remember you just hired Fred and Sam. Which is really key. Because I love sitting in on your calls, because you always have such nice conversations with the clients and get to know them. But the key thing is, from our perspective, it's really important is in those meetings is finding out from the client what is happening in their business, because what we want to hear about is making sure that is reflecting in their numbers.
Yeah, and it's nice. So say if I have the management accounts, the review meeting, but then the client will then talk about what's going on currently. So then when I prepare the management accounts, I can see, this is invoice. They said they were recruiting Fred or Sam, or, they're getting a new office, or office expenses are going down because maybe they're leaving the property, or it's good to sort of make the numbers a bit more real rather than just receiving invoices and expenses.
Yeah, because this is what a lot of people don't understand. They think that everything can just be automated now. Now, a lot of it should be automated. Absolutely agree, but a system is still only as good as what is being put in it, isn't it? So even if you have everything automated, if you've got somebody in the office still putting invoices in the drawer or not putting in their expenses until 6 months after the year end, you're still not going to, that your automatic system's not going to reflect that. So whereas if you are talking to your client and you told us about some training program you guys did, but I can't see the training invoice, where is it? And you find it's in Veronica's drawer, and that's where it is, and you get it found out, those things happen because businesses are still people. There's still lots of people elements, and that's why, I was trying to explain to my husband the other day about why certain things could take a long time, and I was like, well, it's all these different shit, and he didn't quite get that you could have different people producing a set of accounts could produce different numbers. And I was having to go through that about, there is actually decision making about, well, how long do you want to depreciate your items for? So, if your client actually, they refresh their computer equipment every 3 years, so you're not going to want to depreciate that over 10 years. You need to depreciate it over 3 years, over the useful life. So if you don't know these things, if you don't talk to the client, you're not going to know that sort of stuff.
Yeah.
Okay, so I think hopefully we've persuaded everyone. There's lots of good reasons why you should have management accounts. So Rachel, if somebody either has got like a really rubbish management accounts pack, not a lot in there, or haven't got anything at all, where should they start? What are the practical steps to starting getting management accounts?
First of all, make sure all your bookkeeping is up to date. So that includes reconciling all your bank accounts. Make sure your invoicing's up to date, so that when we prepare the management accounts, it's going to be based on good information. You need a good accounting software, and you need good processes really for making sure.
Accounting software we deal for SMEs or even a fast-growing business. What sort of accounting software, do you see clients using that are really good?
My favourite is Xero and QuickBooks.
Oh, your favourite's Lucy. My QuickBooks, but we give equal love.
And also a few clients use Sage. But those are I'd say mostly Xero or QuickBooks, and then a few with Sage.
Okay. So, and, even when we've got clients that have multiple companies, often those still are okay. At some stage you will get to the point where you might need an ERP system, but those are good starting point. They're good ones.
Yeah.
They're reliable. They're all cloud, so you can access them from anywhere. And there's lots of plugins as well, isn't it? So they become quite powerful because there's a lot of different features you can put in. So you've got a good system. What's the next thing you do once you've chosen the right system?
So make sure your bookkeeping's up to date, and then you'll need to, someone will need to do that, and you'll need someone to pull together the management accounts pack.
Yeah.
So either have someone do that in-house, or you would outsource that.
Mm-hmm.
You might need to get an outsourced FD to help you start that process.
Okay. Right. That's interesting. So, we see that quite a lot at part-time FD. So, what's the benefit of having a part-time FD to your business?
Well, when they're part-time, you haven't got to pay them as much, and they can focus on your business.
Yeah.
And then, they can concentrate because, being an FD, that's what they're good at, rather, take away the focus.
Absolutely. You do not want to have a part-time FD that is posting journals. They should be there for helping you with your business plans, doing analysis, helping you with funding, help you with strategy, not making sure that your bank's reconciling. That's not what their purpose is. So you do not want to be paying FD prices for the sort of accounts work. Absolutely. Okay. So you get the, if you haven't got it in house, get the right people. So either part-time FD, outsource it to your accountant. What else do you need? What else should people be thinking about doing?
Thinking, what sort of information they're going to want in their management account. So what are their goals and objectives, and then this is the information that they're going to want to see in the management accounts.
Absolutely, because that's so irritating. People often spend a huge amount of time putting together beautiful business plans. Well, your management account should reflect what your goals and drivers and everything are, to see, are you doing well on your business plan? So absolutely.
Yeah.
Before you go into your next bit about the rest of how to set up your management accounts, we've had a question for Nigel, Mr. Elks. So he's saying, hi Nikki and Rachel, these numbers are so important. Absolutely, completely agree. Do you think companies should analyse, for example, gross profit on a more regular, weekly or even daily basis, industry dependent? What do you think, Rachel?
I would say daily's quite a lot to do. And for some industries or for some clients, that weekly might be better, because then that is more timely information and results can be acted on.
Yeah, I think it really does depend on access to that information.
Yeah.
And the volume. So, for example, when I've worked in multinationals, certain things you pull out some reports daily, but usually you still would pull out weekly reports. reports rather than daily too much, because there's it's only so much time, because there's trends as well, isn't there?
Mm-hmm.
With the gross profit, it really depends on, because if you're in the construction industry and you were trying to calculate gross profit on a daily basis, that could be a bit time consuming and messy, because you're having to update your work in progress every day. So it could be a bit messy, but yeah, weekly does work with some industries, definitely, and we've got some that we do weekly reports for. I say probably daily, you might just want to see daily sales figures, perhaps, and weekly gross profit. But yeah, depends. But yeah, more information doesn't necessarily mean better, because sometimes the managers can just, that it's just too much and they get overwhelmed with it all, don't they? But I hope that's answered your question, Nigel. So yeah, we do think in general more is better, but not too much that they get overwhelmed.
Yeah, no, not too much that they turn off.
And that it's accurate still.
Yeah.
Okay, so when so you're talking about making sure that the management accounts are in line with the business plan, this sort of information. So where would you start with sort of basics of what you would expect in there, and where would you get the information, and what's the sort of next steps? And
so I would get the information from the accounting software. So say for Xero, I would pull out your P&L and balance sheet reports, and then I'd run some expense analysis on that. I'd talk to the client to see what KPI information they need based on their goals and what they're aiming for in the next accounting periods, to make sure that the information is relevant, and then also discuss how the information is wanted to be presented, because it might be, you don't want to see just numbers on a screen, maybe a graph might be better.
Yeah, absolutely. Pie charts, graphs, pictorial types things.
Yeah.
In the KPIs, we often do traffic light systems, don't we?
Yeah.
So the first one you can see really, so very clear. You can see, it's red.
Yeah.
Oh no! And internally we have KPIs that we do internally, and we do those weekly. Every Monday, Sarah sends them out. The key thing is as well, sorry, because we're running a bit out of time. Rachel and I could talk about management accounts all afternoon, but we have got work to do. So what was I going to say? Because we've talked a bit about when people haven't got anything and start having and then start developing it. What I've often seen is, which I think is very important, is when we take over a set of management accounts, often it might be a huge amount of a big pack, and then we sit down with the client and they don't actually understand what's in it or why things are in it.
Or need the information.
So a big tip should be, regularly, when you talk with your advisor, understand why is something in there. Do I actually, if I don't understand it, it shouldn't be in there, or should I, work out how to understand it and rationalize it? Because you don't need a huge big book of stuff. You need to be a bit more fussy about what's in there, because there's only so much action you can take as well. So it is getting the balance between, you need enough information to do something, but you don't want so much information you've then got information paralysis.
Yeah.
So because that's often what I do is sometimes just rip the whole thing up and just start again with the clients. Okay, so we've only got 5 minutes left, so we better sort of wrap up now, Rachel. So we've convinced people out there they should be having monthly management accounts. What's the practical steps? What should they do this afternoon?
They should make sure their bookkeeping's up to date.
Yeah.
Because if the bookkeeping's not up to date, then the management accounts are not going to be providing the right information.
They'll be useless.
Yeah. Check
Go
what
do
they.
the basics. Get the basics first.
Yeah. Think about what information they want to see in the management accounts. What the company is aiming for. And make sure they've got good accounting software so we can get the information and how, like, the process. So if someone does want management accounts, well, how's that process going to work? How are they going to get the information out of the system and then turn it into a good set of management accounts?
Absolutely. And finally, make sure you put aside some time every week or each month to actually review and understand it with your accountant or all your advisors, because there's no point just producing it. You actually do need to go through it and then take actions from it. So that was simple. So is make sure your basics are right. And this is to everybody. Bookkeeping is very important. Bookkeeping is completely underrated so much, but honestly, Rachel and I, we've had enough of our share of fixing people's disastrous bookkeeping. You know, getting a good bookkeeper and a good bookkeeping process, they are like gold dust. Very, very valuable. So good bookkeeping, use a good system, decide what you actually want in the pack, and fourthly, make sure you have regular review meetings to actually do something with it.
Yep.
Fabulous. Well, that wasn't too bad, was it, Rachel?
No.
Excellent. You'll be welcome back anytime. That's really good. Really good. Super. So thank you very much for everybody that tuned in today. I've been up very late doing audit work last night and this morning, so I have got not a clue what next week is. What date are we at the moment? 20. I know what. I bet you anything I'm with Mr. Nigel Wells next week, and we're probably talking about business sales. I suspect that's what we're doing next week. But you do come and please contact Rachel for any questions that you have. She's on LinkedIn, so you'll easily be able to find her. She, as you can see, she's super friendly and kind, so she will be nice to you even if your bookkeeping is rubbish. And do say hello, even if it's just to say hello. And we'll see you next week, same time, Friday, 12:30 for the Business Boardcast. But thank you very much, Rachel. Lovely to have you.
Thank you, Nikki. Bye.